Let's take a look at some charts on Grin from this week's article for Brave New Coin. So Grin is a privacy coin. It has default privacy, which is why we cannot see the daily active addresses or daily transaction volume on the chain, very similar to Monero. So for many privacy purists, maximalists, these are the only two coins that really matter from the privacy standpoint. Grin is basically at the very bottom here in market cap, very bottom in fees, likely related to transactions per day, very bottom in transactions per day other than PIVX, and at the bottom of the pile for GitHub commits. In general, I think many people approve of Grin's approach. It doesn't have a treasury. It has sort of self-funding community development. Lots of anonymous developers, pseudonymous developers behind it. So it has a very strong community. But on the other hand, right now, inflation for Grin is still around 80%. So, if your issuance is that high, it can't have store value in the near term. The flip side of that is if it's listed in a lot of exchanges and if there's a bull run for the pair, it has its shot at exploding to the upside. But Grin also doesn't have that running for it either. Because it's a privacy coin similar to Monero, it won't get listed many places due to regulatory concerns, justified or not. So I think in the near term, it's going to be hard for Grin to do anything of note from a price perspective, mainly because many people can't even access it unless you mine it yourself, which is probably a pretty decent avenue considering that mining difficulty, which is this here, sort of fell off the table and has flattened out. Now, mining profitability is probably echoing this chart here as well, assuming that because of price decline, mining profitability has gone down significantly. But, 2030, 10 years from now, when inflation is reasonable, I think Grin has a shot at surviving price-wise. But right now, it's just hard to swallow that issuance. If we look at transactions and transaction fees, most of these spikes, this line here, this is transactions per day, are most likely related to mining pool payouts or some derivative of that. I think the most troubling thing is that the transactions per day were kind of flat and steady for a year and a half, 2 years, but recently they kind of just dropped off. So this to me says that a bunch of miners just said, enough's enough, I'm going to stop mining this for now. Transaction fees are pretty low, but that is likely related to transactions per day. They may have changed something here in the code. I didn't really find anything specific, but they may have changed something here that allowed fees to drop significantly. Looking at the GitHub, this is just the main repo. It's fairly active. It's not, Doge or LTC where there's no commits on the main repo. So there's definitely activity here. Like I said, it's very well funded by the community. So there's definitely people behind it. And like I already mentioned, there's very few exchanges for Grin, very few pairs for Grin. USDC is basically zero, ETH volume basically zero, and this USDT and BTC volume is where it's at, and this USDT volume is mostly exchanges that no way can be real as far as how much they're putting out. So this USDT and BTC pair are probably pretty evenly matched from a volume perspective in reality. Looking at some TA for Grin USDT, I have the 50, the 200 EMA, VPVR volume profile of the visible range, volume, and RSI. So this doesn't look terrible from the perspective that it actually consolidated for over a year now, basically flatlined, right? Like you're not pushing lows, you're not making higher highs, you're just kind of dead. Tons of volume here on Poloniex historically relative to other price points. This was just a slow bleed. This is what you don't want to see in anything if you're bullish or looking for a reversal. You want to see fast drops if you're looking for a reversal because that encourages capitulation. It encourages people who are going to sell quickly and to not slow drip it day over day over day over day. This is all likely mining related, just looking for ROI on ASICs or whatever. I actually don't think there's an ASIC for Grin, or if there was, it's completely unprofitable to mine at this point. But at any rate, price is sideways for a while. It looks good from that perspective. This isn't white coffee and accumulation or anything like that I can tell. There's no real patterns here, maybe an ascending triangle, but yeah, I do like this mean reversion possibility back to $1, where the previous range sort of was. So you could say, okay, it's 48 cents now, it's a decent upside, but the question is, how long do you want to hold it? How do you even access it? That sort of thing. A lot of people can't even access Poloniex if you're American. As far as volume is concerned, it's weird that this high volume day didn't actually result in an immediate price spike down, so I don't know what that's about exactly. RSI looks fine. There's no bear divs or anything that would prevent this from continuing to move higher. And then if we look at Grin BTC, this pair has pushed all-time lows and basically sitting near all-time lows. And this picture versus this picture, the difference here is the divergence in RSI. So there is currently a growing bullish divergence multi-month at all-time lows for price. So to me, this is a case where I say to myself, okay, I'm going to bite the bullet here as far as buying knives or whatever. These lows start to look more attractive as I see RSI moving up, right? Lower lows in price, higher lows in RSI. That says bearish momentum is weakening. You can see again, there's a really high VPVR level way up here at around 12,000 sats. It's at 6,500 right now. So that's basically near a 2x upside. As far as the trend is concerned, though, obviously it's been below the cloud its entire life. It's below the Kijun by quite a wide margin here. There's a decent case for a C-clamp where the T and the K lines are super spread apart. So there's definitely many flashings of being oversold here. You have the C-clamp, you have the RSI divergence. There's likely a volume divergence here as well. So I can't expect anything crazy as far as bullish continuation or bullish reversal to the upside. But this does look like it has a decent shot in the near term to start curling up to at least like 9,000 sats. I wouldn't expect anything over 9,000 in the near term because this trend has just been so strong. It's going to need to basically be above 12,000 sats to have a chance. It'll be above the 200 at that point as well, above the cloud. So until then, you can't expect bullish continuation for many months, many weeks, that sort of thing. But where it sits now, it actually looks pretty decent for a reversal to 9,000 sats.